Welcome back. Now it's time for our weekly market update with Catherine Murray, host of The Buck Stops Here.
Thanks, Nima. Hello, everyone, and welcome to Weekly Market Recap. I am Catherine Murray. Well, we are seeing markets stabilize this morning following some declines yesterday, some pretty big declines in the United States. TSX was down by about 0.5%. The reason for the declines is concern surrounding what we'll hear today from Fed Chair Jerome Powell at Jackson Hole in terms of his views on current and future monetary policy. Very mixed views right now from the market and also the committee members at the Fed in terms of whether or not they should cut rates, raise rates, or just stay neutral and continue to be very data dependent. Remember that markets were expecting that we would actually see rate cuts in 2023. I think that that's really gotten pushed out to 2024 at best. There's still a lot of conflicting economic data points. So what we did see yesterday was those mega tech companies within the market declined. They were the biggest decliners. And importantly here, NVIDIA, despite a blowout quarter, unable to hold on to those earlier gains. So again, that just tells you that the market and investors are saying, I want to maybe cut my losses. We don't know exactly what the Fed's going to do. Not that you do at any point necessarily, but and we've also seen some great runs in those tech stocks. So they were under pressure yesterday. We are also seeing this morning some stabilization within the price of WTI. That's up by about 1.4%, but it is on track for about 2 weeks of declines. We're seeing the US dollar flat right now, but it is on track to be up by about 3% over the past month alone. So a lot of different moving pieces and parts, and the stronger US dollar is also causing perhaps a little bit of nervousness within the market as well. It does put pressure on some of the earnings, some of the corporate earnings. Away from that, stepping back and just taking a look at the market narrative, obviously the Fed's talk today is front and center. There's also, of course, the viewpoint that some of these tech companies were unable to hold on to their gains. So that's something that's getting watched as well. And there's also been a big backup in yields. And that's, of course, a concern in terms of higher funding costs, the pressure that puts on the economy, as well as the consumer. Speaking of which, when we take a look at the consumer, we've had a slew of retail earnings this past week, and some good results, but overall, very, very mixed, with a lot of cautious commentary, specifically coming from Nordstrom's, just to point that out, as it relates to looking at the consumer and noting that they are more cautious. So remember, when we've seen the strength of the market, part of that has been supported by the resilience of the consumer. That is now getting called into question from these retail earnings results. Away from that, when we take a look at the TSX, as I mentioned, it was down by about 0.5% yesterday. And is on track for some declines, down by about, it actually does follow about a decline of 3% last week. So again, just trying to hold steady here on the TSX. In terms of what to watch here, we will have Canadian GDP results next week. That's going to be an important number for the Bank of Canada to be mindful of. They are going to be meeting on September the 6th. And there is the viewpoint, given the fact that we had hotter than expected CPI data last week, that we might in fact see the BOC, the Bank of Canada, raise rates by 25 basis points. So a lot coming up in terms of economic data and central banks potential moves that is. Nima, I'll leave it there. Back to you.